Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for October 22nd, 2019. We're talking a top, well, maybe not the top, but a market into resistance with little volume divergences. So this is not the first, it's the first, second, third, fourth time we've seen this pattern. And just like these other times, we're going to compare those in the video tonight. We're going to talk protection and safety. All right, so what's going on with the broader market? We're looking at the S&P futures right here, which is into this just above 3,000 pivot. And the prior high, 30.30. In the actual S&P 500 index, we're looking at similar levels. So 30.27, 30.28, or just simple math, 30.30. And in last video or prior communications, we were talking about the market pushing up into these levels, but maybe not exceeding them, or not exceeding them by a lot. And that's going to be our alternate thesis for a break and surge, sort of like June. But as we go into this week, as earnings keep reporting and markets keep jumping up and down in terms of what the reactions are, we're going to be watching this. So we will have a dominant thesis, sell swing, or protective play. Now that includes, again, we may be a little bit early. Today's not going to be at the top, we don't think, but it's going to be at least a spot to get risk, protection, hedges, etc. We're not playing for the top. We're not playing for that exact elusive turn. We are just looking for protection and how to balance our portfolios. Maybe overweight to the bear side, or overweight to the sell side, or protective, however you want to define that. So just going back to starting with April, we had this consistent rally. We'll take us, actually look at the SPY. That way we can look at volume, internals, and metrics. So what we're looking at is a market going up, 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 higher, higher, higher on reduced or declining bull volume. That's the pattern. That's the play. It's essentially indicative of a market losing momentum, losing strength, and losing the buying pressure. That shows up through internals, which is your AD, advanced decline line, or other internals, or in this case, volume. So that's what we're looking at for a comparison, meaning what happened here gives us a little pathway to the future. So we were recommending, Don and I and the others here at TheoTrade were recommending bear positions or protective positions. Again, you might have thought, oh, where's the top? But that came a little bit later, and that led or preceded a relatively precipitous drop. And the S&P 500 ETF, that was from 295, $20 lower, which is 200 S&P points, down to about 275. With the other component to look at or watch, which isn't here right now, but as we go through this week and into next week and really into November, that's what we're going to be watching for. So not only for a divergence or a weakening in buy-side volume, or the green bars, but a pickup or rise or increase, you can see it here, in the sell side volume, which are the red bars. So if that's the pattern, volume precedes price, and of course momentum is a leading indicator of price reversals. And that was just a play into April. Similar setup happened into this June, July, and that was 302 in the SPY. Similar decline or reduction in bull volume as the price goes higher, and a little bit of a peak up or perk up in red sell volume. So we got these days on a departure swing from 302, 2 days lower, and that was on very high SPY, SPX, and S&P futures, and just general broad market volume. And again, that preceded a further drop to the downside. Not quite as stellar as the April into May decline. And we had a similar event take place into here August into September. Same commentary, same logic. Decline in green or buy volume, and an increase or pickup in red sell volume. So what's happening now? Well, we had a little bit of a consolidation, but you can see it again, a decline in green or bull volume. We don't have as part of the picture right now. And what we'll be watching on, of course, that's a spot to get your trades on, is the spike up in sell volume. And that's going to be kind of the last straw for a sell swing to take place into the remainder of October, maybe into November. And again, that's just the SPY. You can look at this on the broader futures contracts. In the Nasdaq, what was the picture like then? This is that April into May period. Again, decline in the bull volume. And I think this is a key, spike up or pick up in sell volume. And down the market went in the Nasdaq futures. A couple of little sell swings there. Same logic, sell swing or reduction in, we'll push it over this way, reduction in bull side volume, looks better that way, and a pickup in sell side volume. And again, down the market goes. So again, in terms of positioning, this is going to play out in broader stocks. I won't necessarily go through those in tonight's video, maybe on Thursdays or in the future. But this same logic of a market overbought into resistance, maybe with a little bit of an additional push, maybe one more swing. But in the Nasdaq, we're watching the 8,000 level. In the Dow Mini Futures, that's just shy of 27.5. And in the Russell, it's just a different animal altogether, because the Russell's been range bound and it's playing off of 1560, which is shy of 1600. So we're watching these levels in the Russell. But I think the focus, maybe for me at least, is still on the S&P. And again, that will drive your analysis, planning, and strategies. But again, the same concept is in play. You can see it playing out into the Russell as well, with a reduction in bull volume and a pickup in sell volume. Same component, reduction in bull volume, pickup in sell volume. And that's just sort of a cycle, or how the market plays, or how to read price with volume. So as we go into the remaining earnings announcements, we've already got a few big names behind us, and those have surprisingly been bullish, or at least the outcome has been bullish, or the market reaction has been bullish. But we are up into a critical spot, and that is just above 3,000 or 3030. That's kind of that zone of indecision in the market. And that will determine whether we play bullishly, which is the lower probability or the alternate thesis outcome, or bearishly. But again, we're not in the business of calling the little top, which exact price, which exact day, or which exact hour. That's not how we do this. It's the odds have shifted. The buyers are losing control, losing strength. So we want to join the winning side. Not quite the bear side yet, but it's better to put the trades on the way up into a pivot point or potential turning point, as opposed to joining the whole crowd with that sell volume on the downside. As we go through the rest of this month, that should be our guiding principle. Whether or not the market is going to stall, reverse, and trade down for the first, second, third, roughly fourth time in 2019, or maybe this time's different. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for October 22nd, 2019.